Good afternoon. Ira Epstein of Linn and Associates with your metal market wrap-up for this Wednesday, and we're now at March 10th, 2021, about 5:15 p.m. Central Time. So as we've reopened into the Thursday trade session, all of the metals have a bit of green to them. Most of the currencies getting a little bit of a bid. We're sort of flat right now in the bonds and notes. We had a 10-year note auction today, a large one, and as Rick Santelli graded it, and I've known Rick for many years, decades, Rick rated it with a D plus C minus, interesting, and we're getting a little bit still of a bounce coming in the energy markets. But this is about gold, and of course gold looks how's the economy going and what's going on, and throwing a $1.9 billion relief package out there could have inflationary meanings. That's the point. So the gold market, it's certainly holding for a change above 1,700. That's the only positive thing I can say at this point. It is up 1.5% for the week so far, including the early trade on Thursday. On a closing basis, you can see you've had your bounce and you're up $26. When I move back now to the daily chart, you can see that the market is getting this climb in it all of a sudden, sort of what it did back here, sort of what it did back here, but it failed each of those times. So that's why I'm pointing that out to you. Has the market done any damage on the trend? Not really. You still have a pattern of lower highs, right? Lower lows. The trend is down until you take out 1739.10. But with the current formation, it cannot turn bullish unless you get a big outside day or something happen. Because right now, even if you took out the 1739.10, you'd have a lower low and then a higher high over that. That's not the beginning of an uptrend. Where might the market run into resistance? Well, at this point, I'm going to guess it's the 1747.40 area. If it can clear 1739.10, in front of that's going to be the first resistance point. When I look at the Bollinger Band, we had run it. Remember what I said. Eventually, instead of hitting it every day, you start moving to the right. If you go generally a day or two, it's a good sign. You got to always look at stochastics. Is the market ready to give you a bounce? And that's what this market did. In terms of the slow stochastics, let's go back. This is Tuesday. They were still embedded. This is today. You lose the embedded reading. Any reading in my parlance over 21 after a market was both numbers in the under the 20 levels is a sign that the market has lost its downside momentum and it's ready to rally. The only time that can fail is if you re-embed the next day. Now, I wish I could tell you that I know what the whole next day is going to do. I don't. But more times than not, after the early morning opens, you have an idea, and I'm talking morning, not necessarily tonight, what the market's going to do. By the time I get up 4:30, if this market's down and losing it, it's going to be probably a lost day. But if it's staying well above it, I feel the market's going up from there. Now, the importance of that is with tonight's move, you have both numbers over this line. Now that's even a better chance you're not going to re-embed, a big chance that you won't do that. So what I think the pros are going to do here is I think they're going to buy this market. I think they're going to put their stops under the most recent low of the market, and that's going to be the 1670.330 level. What number on this chart do you think the market might go to? Well, if it can clear the 1739.10, why not that 1747 or wherever the 18-day average comes in? That would be my guess. Is this for the faint of heart? Of course not. This is a big risk in that market. You know, some traders will use the mini contracts. Okay. But what's it a sign to me? If I want to come back to that for a minute, it's a sign it can't be short. That to me is more important than anything. The odds are that it's going to go higher. Will it break the trend? I don't know. The downtrend. If it breaks 1739.10, then there's an even better chance that it's going to make a run for wherever that 18-day average is. In the gold-silver ratio, you just got over the 18-day average, which is normally a sign where gold is gaining on silver, and it hasn't given it back yet. So that's still at work. In the silver market, you never did embed, so you don't have the same type of action there. You have a market that got very oversold and began to correct. You got to get both numbers over 30 for them to say they're not oversold. Not quite there yet, so you can get more upside, but there's a lot of resistance up in this 26.75 area, 50 cents higher. In the copper market, I just think that the market has gone, don't know what to do next. I'm guessing that at 440 copper, you woke up all the miners that can produce and they said, heave ho, let's produce the copper. That's a heck of a number considering you spent all of last year probably under $3, the vast majority of it, and even this year you were at $3.50 and suddenly you got up $1 from there and this is where you're at. Could that prove to be a short-term top or a top? Yeah, got to be careful. Spikes like that, you got to come down and consolidate and then see what happens. Copper strikes would be a great thing for higher prices. Big demand from the world coming out of COVID, another element. But a lot of that was built into this 440 level. And now the question is China under their new 5-year plan and the revisions that they've made, and there are plenty of revisions. I've been writing about them in my newsletter for my full subscribers. They're trying to tame that economy back a bit. They don't want bank lending as strong. They're looking for a smaller GDP number, not by much, but they're looking for a smaller one. The 8% was their first goal, now they're 7.8%. It's still a number we'd all love to see for ourselves. In the platinum, you got very oversold and you're getting a bounce. Where do you think the resistance is? Well, I think it's going to be 12, 16, 10. The market's out of being oversold. I think the pros will nibble into it there. Their stop has to be over 12.32, and we'll see what the market can offer on the downside. In the palladium market, hitting a lower Bollinger Band, I think took the pros out of their short positions. Now, will you embed? Both numbers are under 20, but you can't count it tonight because you're too early in the session. So you go to the Wednesday session. They were not under 20. So the most you can do today is have your first day of being very oversold again. And first day of possibly embedding with it. So you're oversold. You've been that way for maybe a week and a half or so, but now both numbers are under 20, at least in the early trade tonight. Still don't see anything. And it's certainly got a funny pattern. It's got the higher high, lower low. In the dollar index, you had 3 sessions in a row where you stayed over the upper Bollinger Band. Futures are different than spiders and ETFs. 5 over a Bollinger Band is stretching it. I've seen more, so have you. So don't say, oh, Ira, I'm going to write him. He doesn't know. How many do you see in a year? That's the point. You'll get over them often. It can be 1 through 5. It's rare that it's beyond that. I realize it. It's also not a signal when you do that to get long. It's a signal that the market's stretched like a rubber band. It's ready to roll back. That's what it is. That did not change the trend. It's still bullish, or is it? Well, you still have both numbers over 80. We haven't opened tonight, so I don't know what that's going to look like. They were over 80 the other day, over 80 there. 3 days in a row, including today. If this market is down tomorrow, you're going to lose the embedded reading. If you lose the embedded reading and it stays lost, the odds favor you're going to make a run back into these two numbers, at least to the 100-day. So I look at that and I build it into my plan and I go, uh-oh, if I'm long, I'm nervous about this market. I'm not liking what I'm seeing right there. I'll talk about this and everything like this in the morning in my subscriber videos. Now, they're different than these because instead of me telling you what I think the pros might and might not do, I'm telling you what Ira thinks you should do. And Ira's going to tell you, I want you to buy here. I want you to sell there. This is where you're wrong. This is where you're right. Here's the rationale on the trade, and away you go. It's full guidance. I'm also a lot of times say, I don't want you to do anything. It's a great time to put your hands in your pocket. This is not DraftKings. Don't make a trade. You'll hear me say that often. So I look at all this and I put it up where you can watch it on your phone. You can watch it on a tablet, your PC. I start you off in the morning at 5:40 with the day's news out of Asia, Europe, and the U.S., what's important. I cover the markets in this exact sequence. I make it easy because you're getting all the major futures markets, and I make it inexpensive. Yeah, if I'm putting these out with each video is about 20 minutes long, and they're done in a way you can scoot right through them, well, Nothing wrong with $8 for 30 days. That's, by the way, 6 videos a week typically. Monday through Friday, the morning video. On the weekend, just weekend charts. In other words, the week chart. So now you're getting the bigger chart pictures with those. I do mix and match during the week. So if I like something on the daily, I'll open a weekly chart often and say, here's why I also like it on this one. So I'll throw both at you. It's a full package. Give it a try. It's not going to break your bank. How do you do it? Just go to our website, under the word research, take it from there. I'm Ira. You have a great day.